All right, welcome back to the program. My guest is joining me right now, Steve Nwachukwu, who is the Chief Executive at Steward Asset Management. Hello, Steve, and thank you for joining us this morning.
Thanks for having me.
All right, let's get started. Speak to us about what happened on the floor of the Nigerian Stock Exchange last week. What really drove the markets?
Well, in a general tempo in the market, we saw more activities in the market, more liquidity within the market, and we continue to see investors taking positions. We continue to see volumes of activities increasing as a result of the liquidity within the market. So the market last week saw a mixture of activities, the up and down. End of the day, the market lost about 0.42% during the week, but the year to date, the market is still in positive of 1.82%. The index and market cap also saw some slides of 0.38 for the market capitalization, and the market cap closed the week at 21.44 trillion.
All right. Hello, Steve. Can you hear me? I can't hear you.
I can hear you.
Okay, now I can hear you. Now I can hear you. Okay. You were actually giving us a review of last week. Just before you started talking to me right now, did you take a look at the market, and where is the market right now?
Yes, the market is still positive this morning as we speak. The market has actually gained about 0.08%, which is about 8 basis points. And most of the stocks that also have the positive rate or the issues within and around what is driving the market is still within the market. On Friday, we saw some results released at the floor of Nigerian Stock Exchange. That is the Unilever. Its fourth quarter report, and we saw some slide, although the company are still trying to come up from a loss position and it still remains for loss. But the fourth quarter we saw some slight improvement from a negative position of 4.4 or 4.2 billion down to also a negative position of 1.6%, which means it has improved. It has maybe in the next 2-3 quarters, Unilever will be totally out of loss position.
There were also some things that happened last week. Flour Mills listing about 29 billion naira of bonds. We also saw news around Transcorp. Can you speak about that?
Yes, issue of Transcorp remains the new development, the new setting, the new diversification we are seeing by the owners of the company, that is Tony Lumelu. He has quite a large of investment he has made in a couple of weeks, a couple of months back. Of recent, we saw Transcorp buying Afam Power Plant. Afam Power Plant, the one based in Texas, is now fully owned by Transcorp. And of recent is that of the oil well, the OML, that was recently acquired from Shell and also other facilities associated was also acquired by Transcorp. So this news is still within the market. For those of us or for those investors who are looking for a stock that will be profitable in the medium to long term, not in the short term, because most of these very developments will start really reflected in the books of Transcorp in a long and medium term. So Transcorp is still within a very good stock to buy and hold positions for a future profit.
Okay, banking on that, what category of stocks do you think that investors are going to pry on this week?
Generally, I would say the stocks will now not be by sector. It rather would be by individual stocks. It's a fixed period or this time of the year that investors will start measuring stocks based on their fundamentals, based on their return to investment, based on what they can yield for your investment. So now stocks will be selected from sector to sector. Individual stocks that have sound fundamentals will resist any further fall. We start seeing investors comparing dividend yield last year to what possibly companies will be paying in the weeks to come. Because we expect by February, by first week and second week of February, companies will start releasing their fourth quarter financial statement, which was accompanied by their dividend corporate action, which will state how much they'll be paying. So investors will continue this way to take position in such fundamental stocks, which cannot be paid in a particular sector. It will be by individual stock trades that investors will be looking from sector to sector, from consumer to industrial, from banking to insurance. These are the sectors that investors should be looking. Like I said, individual stock, not sectorial.
So is this a time for investors to take position?
Yes, it is a time for selected stocks that mostly investors are looking at for dividend yield, for dividend payments. To be looking at for stocks that have a good history of dividend payment, a consistent history that they will pay dividend for over a period of time. So these are the areas investors with, like I said, investors with interest in yield should be looking for.
Let's talk about the MPC meeting that has started, that is underway right now. How is the market, what is the market looking for exactly? Because the last time we spoke, you did tell me because of the environment, the market environment, especially the money market environment, what we're seeing that we've seen lower yields in the money market environment, and that is what is pushing funds into the stock market environment. What are you all looking out for with the 1st January MPC meeting that is underway?
Nancy, to be sincere to you, most of us are not looking at changes in these very key parameters of the MPR. We are still looking at a whole position. We are still battling with COVID-19, and we are still battling with the issues around the economy, the inflation rate, the recession. So MPC may not be likely be shifting most of this ground. Rather, it can shift some of the corridors and possibly hold on the MPR, because we still need the MPR rate to remain within the region. Yes, we have a very low regime on interest. We also have a very low regime in the monetary market. So, but we expect the CBN, the committee, to hold on most of these very key parameters.
Okay, Steve, are you still there? Because I have a lower audio of you, but I can still hear you talking. Steve, if you're still with me, I would like you to respond to this. Talking about the CBN interventions, if we take a look at their policies, from a market perspective, what do you think?
Well, to be honest, I will give a credit mark to Bank of Nigeria, because they've done extensively well. Most of the policies they've dished at are actually most of it should have been a complementary policy from the physical side. CBN, we have seen CBN overrun the economy, overperform or over presence of the CBN in most of the key areas. So actually CBN is doing their best. The constraint in the dollar inflows, together with limited physical policies that should aid most of these policies coming from the CBN side or coming from the monetary side. So as we speak, most of their interventions are very good. They are meant to stimulate the economy, to make resources available to Nigerians, to manufacturers, to all sectors that require it. This is what should be same coming from the fiscal side, and put up policies that will make flow of money within the system to stimulate the economy and get everyone running, get every sector running, and you will see the economy grow. As we speak, CBN have come up with import restriction, you have had the issue of agricultural loans, and the rationalization of forex. I think this is the area I must give kudos to CBN. They've done all they could. As we speak, the foreign reserve have risen from as low as 35 to 36 within 2-3 weeks. Yes, given to the fact that we also saw an increase in the international crude oil, so we also see some proceeds, an increase in proceeds to the coffers of government. So as we speak, CBN has actually overshot its band. Like I said some couple of weeks ago, they're actually trespassing into the fiscal policy. So I still hold on CBN to come up with one or two more issues, or one or two more policies, or one or two more interventions to also hold the economy together.
Okay, let's talk about the Fed. Just before you go, the U.S. Fed. President Biden is the new sheriff in town in the United States. He's the president of the United States of America right now. He unveiled a $1.9 trillion economic stimulus, economic relief package tagged the America Rescue Plan. So many things there for Americans. How do you see that news filtering into the Nigerian market? Because interest rates definitely are very low in the United States as we speak right now. Will there be anything for the Nigerian market to gain?
Yes, I think just like any other country, but strategically, United States of America is a strategic nation. Most of their policies have one way or the other affecting other developing countries. So with this very huge amount of money dished out as a stimulus package to stimulate the economy, just like I said earlier, this is the kind of policies we expect the government to be dishing out to stimulate the economy. You need to spend and spend appropriately. With this, we believe that the flow of them cash will have one way or the other reaching out to third world countries like Nigeria. It will also release funds within the system, and you start seeing some of the portfolio investors looking at other places that they can have good yield. And Nigeria happens to be one country that has one of the best yields, both in the capital market and the money market. We have the one of the highest rates we have in the world. So we expect that the flow of such cash will actually come down to Nigeria, in the sense that when there is liquidity in their own system, investors and portfolio investors in those areas will start looking towards other areas, because it's going to price the rate they have there. Already they are in a 0% regime, and while we still have relatively something better higher here, we expect portfolio investors, and we also expect other investment flows that will come from there.
All right. Just before you go, Steve, can you quickly give me your predictions? Because I asked you earlier about the outcome for the MPC, what the market is expecting. Can you give me your predictions around the MPR, the liquidity ratio, and the CRR?
Okay, I think, like I said earlier, I'm expecting the MPC members to stay on hold on the MPR. Maybe a little adjustment in most of the corridors.
I want you to give me an exact figure.
Pardon, I didn't get you.
I want you to give me an exact figure. That's what I'm asking again. I want you to give me an exact figure.
The MPR is at 8.5%, and that's what I expect them to hold.
How about the liquidity ratio and the CRR? Do you see them tampering with any of those?
I'm expecting also, if actually you need the money to still remain within the system. So if you need the money within the system, you need to also keep the liquidity ratio, because if you cut it up or cut it down, it will also affect the bank, because the liquidity ratio is what you have within the bank, within the window they can operate. So we still need more money within the bank to operate. So I still expect them to hold the liquidity ratio at the rate it takes.
Okay. Thank you very much, Steve, for chatting with us today. Have a wonderful week.
Thanks for having me.
All right, I've been speaking with Steve Nwachukwu, who is the Chief Executive Officer at Steward Asset Management. It's time for us to take a quick break, and when we return, Dixon Okore, the team lead, Claims Alliance Nigeria, will be joining me. I'll be talking about the top business risk, or the Alliance Risk Barometer that has just been released. If you're a business person, you're a businessman, a market analyst, a stakeholder, you need to watch and listen to the next interview. Let's go on a quick break. We'll be right back.
The reason why we have poor outcomes of low reliability, poor reliability is because our infrastructure is obsolete and bad, and you need money to fix them. So if you fix the tariff, you can fix the infrastructure and you have reliable power. The other day, Manufacturers Association of Nigeria was complaining that the recent increase is too high. But on the other hand, the manufacturers are paying huge sums of money for diesel generators to run their manufacturing lines, and reliable power through the mains would be ultimately cheaper. So I mean, we need to be serious as to how we think. I think personally, and I could be wrong about it, what we need is reliable power at the right price. With reliable power, you're going to have more demand for it, and then more people would come into place, and then it could affect price. It could bring down price at the beginning.
Hello YouTubers, welcome to Moneyline with Nancy TV YouTube channel. This is where we provide you with instructive business directions, processes, and guidance to help you assess the right resources to fund your businesses to withstand every form of internal and external shock. You will find here awesome informative videos on business, entrepreneurship, and lifestyle just to help you make informed business and financial decisions. Punch the subscribe button and let us drive you through the world of business. Please follow all our social media platforms on Facebook, on Twitter, on Instagram, on LinkedIn, and follow us for latest updates on our website.